What's up, guys? Stas here. So I want to go over three stocks that are pretty beaten down, all of which reported earnings recently. We're going to go over the earnings, the charts, what I'm looking to do. So if y'all find value, hit that like button. Make sure to subscribe and follow me on X as well, at Stas Talk Stocks. You might as well do that. And don't forget to get your free stocks from Moomoo. The clock's ticking, guys. Use that link down below or go to stasurfest.com/Moomoo. Open up your account and fund it with at least $100. You get 5 stocks, each up to $2,000. And you get a free share of SoFi stock as well, again with just a $100 deposit. So get on it, use that link down below. And with that being said, cheers, let's dive right into the video. So the first one that I want to break down in this video, guys, is Applied Materials, which, not to toot my own horn, but did we not call this out that it was way overbought heading into earnings? Well, we got earnings, and now their stock is selling off pretty aggressively. This thing was at what, 158, 157 before the earnings came out. Then earnings came out, and it went all the way down to about 142, so it dropped 15 bucks per share. You guys can see here, earnings came out yesterday, the day before I'm making this video. So it went from 157 down to about, let's see, 142, which was a drop initially of around 8-9%. It almost got into correction territory like that. And now you guys can see we're consolidating a bit. Well, we did on the pre-market today when I'm making the video, and now it's starting to break up, and it's only down now 4% when, again, it was down at 1.89%. So this was way overbought heading into earnings. And guys, when that's the case, a lot of the time, not every time, obviously, we can't predict this every time, but if earnings come in maybe not as good as expected, maybe worse than expected, and the stock's trading at highs, well, a lot of the time, it's going to give back some of the gains. It's going to sell off, and that's exactly what we got here with Applied Materials. It got way too hot. I mean, look, the stock went from, let's see, about 130 bucks just about 2.5 weeks ago, all the way to almost 160 in the span of 2 weeks before earnings. That was a 20% move before earnings. That's pretty much pricing the stock to perfection, at least in my personal opinion. So let me actually break down these numbers, see what's going on with guidance, all that good stuff. So you guys can see, well, maybe you can't see it. I'll tell you right now, though. They ended up reporting, it looks like, $2.12 in EPS, which ended up beating the $2 expected. And they also beat on revenue, $6.72 billion versus $6.51 billion expected. So double beat there for Applied Materials. And it looks like here they see Q1 adjusted EPS of $1.72 to $2.08 versus the $1.69 expected. So pretty good there for guidance for adjusted EPS. And they see net sales of $6.07 billion to $6.87 billion versus the $5.86 billion expected. So they beat EPS, they beat on revenue, and they're guiding up for revenue, which is good. Well, not guiding up necessarily, but their guidance is above the estimates, which is always good, and their stock is still getting beaten down, which honestly could be opening up an opportunity, and hence why I'm covering it here in this video. I mean, we're already seeing buyers come in at the moving averages on the 4-hour chart. We still have a golden cross, which is great. Now all we have to look out for, at least what I'm looking out for, is for this stock to maybe retake 148, 150. I'll actually set my alert there right now. Let me do it now real time with you guys. I'll put one at 149, mark is at or above, and I'll put another one at 150. Why not? Mark is at or above, 150 bucks per share, which you guys can see 148, 150 roughly was the high from the middle of October. So if we're able to successfully break back over that point, which we're fighting right now, you know, this could be going back to the mid 150s, maybe high 150s in no time, which clearly that's been a resistance for months, right? Back in July, August, we got rejected at about 153. Back in the beginning of September, we got hit at 155. And of course, just a couple of days ago, we got hit at 157. So keep your eyes on this weakness here in AMAT Applied Materials. And we also have CHPT, ChargePoint, getting completely obliterated right now. It's down 35% on the day, which is just unfreaking believable. So we got some news, some insights here that ChargePoint sees Q3 revenue of 108 to about 113 million dollars, and they expect, let's see here, revenue of what I just said versus the 150 to 165 million that was previously expected. Unfreaking believable, guys. So their numbers come out in a couple of weeks here. Let's see, 2 weeks maybe. It looks like early December, on the 6th of December after the bell is when they're expected to report. So they're pretty much saying now they're getting they're letting the cat out of the bag. They're like, listen, these numbers that we're going to report are not going to be good at all. Again, they see Q3 revenue of 108 to 113 million, which is still a lot of money, right? But they were previously expecting 150 to 165 million dollars for the quarter in terms of revenue. So this stock is getting hammered today, guys, completely and utterly exploding. It looks like here they also replaced their CEO, which is quite interesting. Never a good sign. Well, maybe it's a good sign considering the CEO clearly was not driving the stock price in the right direction. So maybe this could help them moving forward in the next couple of quarters as they do get the new CEO up and running. But the fact that they cut their guidance is not a good sign. And I think a lot of these analysts came in and cut their price targets, maybe have maybe they changed their ratings as well. So yeah, JP Morgan maintains overweight rating, lowers price target to $5. Oppenheimer downgrades ChargePoint to perform from outperform, removes their $13 price target. So what's their price target now? I guess they don't even have one anymore. It looks like JP Morgan cut them from $8 to $5, which is still well above from where they are right now. The stock's at $2 right now, guys, which is nuts. So this is one that I'm watching pretty closely, kind of as a bounce back trade. Maybe not so much now, but at some point, maybe next week, maybe the week after that, heading into the week that they actually report earnings, this could be one worth watching, as it is pretty beaten down right now, guys. I think it could be in store for some sort of rally moving forward. Time will tell, guys. That's ChargePoint. CHPT, again, it's down 35% on the day, so watch out for that, for some sort of relief rally. And it's crazy because this stock was at $50 in the end of 2020. You heard that right, $49.50, and now it's at $2 per share. Unbelievable. So the last one that I want to break down, guys, and by the way, if you stuck till the end, hit that like button. Make sure to subscribe if you have not done so already. I appreciate you all as always, and don't forget to get your free stocks from Moomoo, guys. Fund your account at least $100 using that link down below. You get a free share of SoFi stock and 5 other stocks, each up to $2,000. And if you want to up the ante a little bit, fund your account at least $1,000 on top of those 6 stocks. You get 10 more stocks, each of those being valued up to $2,000 as well. So 16 stocks for Moomoo using that link down below. Go get your stocks, guys. And with that being said, cheers. Let's break down the last stock on the list today, which is Rivian, ticker symbol RIVN. This company just reported earnings recently, and their stock in the past couple of months has almost cut in half. Not quite yet exactly cut in half, but it's getting pretty dang close, guys. It was at $28 per share back in the end of July, early August, and now it's at $16 per share. It is down 43%, and we clearly have a descending triangle here on Rivian, which has not played out yet. But if it does break under, let's say $15 to $16, which I'm not too convinced that it will, but let's say it does, that's where we could get this next leg down, which I don't know. We'll see. We'll wait for the confirmation, but I'm actually leaning more towards maybe a relief rally for this particular stock. We'll see, guys. We'll see, as earnings came out, and they were pretty good in my personal opinion. So Rivian ended up doing, let me see here, let's come down a little bit. They reported, I think, 10 days ago. So they ended up beating on adjusted EPS. They lost $1.19, which beat the loss of $1.32 expected. And they also beat on sales, $1.33 billion roughly versus the $1.32 billion expected. So beat sales, BDPS, and they delivered 15,560 vehicles in the quarter, and they narrowed their losses, or their losses narrowed on higher sales, which is a great sign. And I believe here they increased their 2023 production guidance to 54,000 total units, which is great. And let me see here, guys. It looks like Amazon remains focused on bringing 100,000 Rivian electric deliveries to the road, which we'll get that probably at some point here in the near-term future, hopefully. So yeah, guys, they beat EPS, they beat on revenue, they're crushing their production numbers. They actually increased, again, their production guidance, right? Yeah, they lifted their full year 23 production guidance. So I'm thinking Rivian's a bit way too, a little bit beaten down here, maybe too much. And I'm looking at it as a relief rally play, maybe off 15 to 16 bucks per share, which it looks like we're starting to rally a little bit right now. It's currently up 1.7% when I'm making this video. So I'm not saying we're going to rip for sure, but it's obviously one worth watching, as it is at a pivotal spot here at about 15, 16 bucks per share. So keep your eyes on Rivian, ChargePoint, Applied Materials. Those are the three stocks for this video. And of course, I'm not telling you to buy these, sell these, do anything. I'm not a financial advisor. I can't tell you guys what to do, but I am putting them on your radar. So make sure you guys go do that. Hit the like button, subscribe, follow me on X as well at Stocks Talk Stocks, and I'll catch you guys later.